Today I want to talk about the 5 indicators that you can look at to make a prediction on capital growth in an area into the future. Firstly, when looking at a region, it's important to really knuckle down and look at the micro data. Look at suburb versus suburb, street by street, and property type versus property type. Often looking at a full region doesn't really give you the true indication of what an area or an actual property might do into the future. It's only when you knuckle down into that suburb by suburb data and look at street by street and property type by property type that you can really start to see a clear picture of what prices might be doing into the future. My local market here in Cairns is a great example of this. A lot of people look at Cairns and say there's been no capital growth in the area, where the matter is it's just not the truth. If you look at suburbs like Irville and Menora, both of those two suburbs have reported 12 and 14% growth in the last 5 years for houses. And if you look at Edge Hill, unit prices in Edge Hill have gone up 30% in 5 years. So blanket saying there's no capital growth in Cairns just isn't the truth. It's important to really knuckle down into suburb by suburb data and look at the property types as well, because each suburb really is its own market and each property really can be its own little market. So if you are looking at growth factors, be sure to knuckle down to the suburbs rather than just focusing on the regions. So let's jump into it and the 5 indicators that I believe you should be looking at when looking into an area and making predictions on growth. The first factor is population growth. Now, this is often probably the most relied upon measure and probably the most looked at indicator when people are looking at growth for an area. And while it is important, you don't want a shrinking population as obviously there's going to become an excess of housing. I don't believe it's the main factor you should be looking at. Once again, to jump into my local market, probably the biggest population growth in Cairns has happened in Smithfield and Trinity Park over the last 5 years. The reality is that as those suburbs have grown with population, they've also seen a lot of development, so prices have remained really steady. Where if you look at other suburbs like Menunda, there's been really no growth in population, there's been no new housing in that area, but yet prices have grown. So while population is important, you don't want a declining population in a region. It's not the be all and end all, but it is one indicator to look at. The second indicator is closely related to population growth, and this is job growth. Now, job growth on its own, like population growth, isn't a huge indicator, but where the job growth indicator really becomes exciting is when you're looking at income growth. As the average income for an area does grow, people have more disposable income and then more money in the end to spend on property. So if you are looking at job growth, really focus down on the actual income growth and are wages increasing in that area, decreasing. We often see it in the mining towns where you'll have people getting paid exorbitant money. Once that money goes away, prices quickly plummet. So that is a really good indicator to be looking at job growth, looking at income growth. The Australian Bureau of Statistics website is a great source for this. It really breaks down the incomes, breaks down the working populations, and will give you some clear data that you can look at moving into the future if you're looking at property growth in a region. The third factor that I believe is really important to consider is new residential development opportunities and new residential developments that are happening at the moment. Now, while development is good, and it creates jobs and it will create employment and often wage increases in the area, it also creates new supply to the market and new properties coming to the market. So it's important when you're looking at an area to knuckle down to the suburb by suburb and look what development's happening in that area. Once again, if you look at Smithfield, Trinity Park, Edmonton, Bentley Park, there's been a lot of development out that way, and that really has subdued price growth for the median sort of houses in those areas. It really has put a limit on what people can achieve for their established dwellings, as there is that constant new supply coming to market. Where you look at other suburbs like Edge Hill, Menunda, Parramatta Park, your sort of inner city suburbs, there's really no supply of new land there. And that really puts a restriction on the development of new properties in those pockets and is a bit of a catalyst for capital growth in those areas. The fourth factor, and one that's very easy to spot, is what I like to call the ripple effect. And that is when you've got one suburb that's classed as a premier suburb that does sell for higher prices compared to the rest, prices do seem to filter down away from that suburb. So a great example is Edge Hill in Cairns here, which is classed as one of Cairns' premier suburbs. We are seeing prices filter down from Edge Hill into surrounding suburbs as people want to live in that location but often can't afford it, so they're looking at the neighbouring suburbs for affordable options. So have a look in your area, see if there's a suburb that is up and coming and is on the edge of what might be considered as a premier suburb, and you can often benefit from the ripple effect of price growth in those surrounding suburbs to that expensive suburb. Number 5 is something that's often overlooked, and it really plays a huge part in the market, and that's investment activity. Now, when we look at buyers are made up into two categories. You've got your owner-occupiers, that's people buying properties for themselves to live in, and investors. Depending on where you're buying will depend on the ratio of these two types of buyers. But both buy for really completely different reasons. The reason an owner-occupier is buying a property is a completely different reason to why an investor is buying a property. So the two can move independent of each other, and you can have a big influx of investment activity, or you can have a big influx of owner-occupier activity without the other one actually increasing. When we look at Cairns currently has 40% of its private properties are rental properties and owned by investors. So if we see a decline in investment activity without an increase in owner-occupier activity, we're going to see a decline of buyers. Where if our owner-occupiers increase and more people want to start buying homes, possibly because of increasing rental prices, and then we see investors coming into the market also chasing increasing rental prices, we're going to see the number of buyers increase, and this is going to push capital growth. So looking at the composition of our buyers is really important in making predictions into where prices might head into the coming years. For Cairns, I do see we have a huge investment market, and over the last couple of years our number of investors has dropped back while our numbers of owner-occupiers have pushed forward, and this has really made the market remain quite steady over the last few years. But as I have predicted before, if we do start seeing those investors coming back into the market, chasing the high yields that are on offer in the Cairns market, I think we're going to see capital growth follow. Now, as a little bit of a bonus, I want to talk about an extra factor, and this factor is often hard to measure and often hard to put a number or a gauge on, and that's market sentiment. Market sentiment really is the biggest driver of property prices. If people feel that the market's going good, that prices are going up, they're more likely to hold on to their properties, and buyers are more likely to pay more for a property because they do feel that prices are going to head up. Now, market sentiment is often delayed when a market first shifts from a flat market to an increasing market. There often is a 6 or a 12-month lag with market sentiment. But market sentiment really is the biggest driver. You can have all the other factors really change, but if market sentiment is still strong, you'll see prices continue to rise. Now, we saw this down in Sydney when Sydney started to get overheated and a lot of people from the outside were predicting drops. The market sentiment in Sydney kept prices rising for quite some time before eventually they did take the nosedive in 2019, but then started to recover. So market sentiment is often a hard one to measure, but if you are talking to locals in the area, you can start to get a gauge. If you're attending open homes, seeing what numbers are around, you can start to pick up what the sentiment is in the market when it comes to real estate. So there you have it, guys. That's my 5 indicators that you can look at, that you can research online, that you can feel when you're walking around a suburb as to if property prices will increase, decrease, or stay the same in the area, and a little bit of an insight into my local market here in Cairns. Hope you've enjoyed the video. If you have, check out my latest video I did. We're always putting out new content on this channel, so make sure you also subscribe and hit that like button. Thanks for tuning in, guys, and have a fantastic week.